All right, folks, with that in mind, let's talk to our man Tim Ord. We talk to Tim every Tuesday and Thursday at 30 past the hour, and we're going to talk a little markets. You can always reach Tim at his website, which is ord-oracle.com. And don't forget, folks, under the services tab, he's got a couple of great webinars. The 6 secret ratios every trader should know. We talk about some of these throughout some of the interviews. And the secret science of market tops, both of those under the services tab right at TFNN. Tim Ord, good afternoon.
Good afternoon. Sorry for the delay here.
That's okay. We're working through a few technical difficulties, myself included. I appreciate you coming on with us, man, and sharing the information as always. And quite a market. We got a little red in the markets, Tim. Let's get into it. What do you think?
Okay, first chart's a daily chart. This is the SPY daily. And more or less, we're kind of going sideways. Been going sideways for, 6-7 days here. So about a week and a half, give or take. And if you notice, the bottom window is the VIX. And then if the VIX is going up and where the SPY is not really going up, it's going sideways. But the VIX is going up as the market's going sideways. That's usually a bearish sign. That's what tops are made of. Because when the VIX goes up, that shows more fears. Actually, it's an option-related indicator. So the smart money is starting to buy puts here. And the smart money is always right. So I guess this is a bearish sign. A close below this line right here, this red line, which is 595, give or take, is basically the previous highs. If you go up and we broke above those previous highs, if you close below them, that's usually adds to the bearish sign. I'm not sure that's going to happen today or not. I mean, we're kind of setting on it. We're off about 0.7 right now, but I think we're going to make an attempt to bounce here. This week is a short week. Thursday, the markets are closed because of Juneteenth. It's a holiday. It's the middle of the week. It's kind of a stupid holiday. But anyhow, so the last 2 trading days are basically tomorrow and Friday. And I think that's where I'm going to get a signal. I'm going to get a signal today, probably not, the way the market's kind of just hanging down here. So I'm hoping for a bounce back up to the previous highs. We go to chart 2. What I'm looking for is this high right here, this is the weekly chart. So this is last week's high. That high came in at 605.06. And a lot of times, you test a previous high. If you test it on lighter volume, that's really a bearish signal on the weekly chart. So I'm thinking we're going to go back up and test last week's high. And again, we're either going to do it tomorrow or Thursday. We're not probably going to do it today. And there's some volume studies suggest that high could be tested because usually the market peaks on lighter volume. So anyhow, I'm looking for this high to be tested, last week's high. And I think from there, we're going to go back down and basically go back to around that 570 area. I do think that 570 is going to hold, but on a short-term basis here, where I think we're making a high. So I hear the music.
Let's take a break. We'll come back. Tim's got a few more charts, folks, looking for testing those highs. And right now we got markets just off those highs. Not that far, though, even on today's action. S&P's off by 44, and we're coming back with Tim. Stay tuned, folks. Welcome back, folks. We got the S&Ps in the red today. Markets pulling back a bit. We're talking to our man Tim Ord. Remember, folks, you can reach Tim at ord-oracle.com. And don't forget about those outstanding webinars under the services tab right at TFNN. You can order those anytime. They're right on your members page. Watch them as many times as you'd like. So let's get back into those charts, Tim.
This line right here is really important. So the market popped above that line. And actually, there are some volume studies, but it went above a previous high. Now, when you break a previous high, you should break a previous high with sign of strength. Sign of strength is at least equal volume, if not higher. And you really had to have a big trading range through the previous highs. And you did have a big trading range, but volume actually decreased by 8%. That suggests a false break to the upside. So if you close below this line right here, which is close to 600, I think it's 595, then if you can't hold the previous highs, they'll attempt to take out the previous lows. Well, the previous lows is basically this line right here, which is basically 570. I think that's where we're going to head. And so, will the market hold above this high going into Friday? Maybe. Depends how it tests the last week's high. If it tests that last week's high on a lighter volume, most likely I'll be short this week. So we'll see how that works out. But I'm thinking the whole thing is basically the pattern forming here is a left shoulder. Whoops. Back to that chart, is a left shoulder, and then this left shoulder here's the left shoulder here, and the right shoulder is forming now. And so I think this trading range type thing may go on until about August time frame, give or take a week or so. But anyhow, just nothing significant to the downside. In other words, this is not a major decline of any consequence, but it's about a 5-6% move as far as playing. So I'm kind of looking for that setup. So anyhow, that's the S&Ps. We don't have a lot of time. Let's go to the gold market. This is the XAU. Goes back to 1988. It's a monthly chart. And all it is just the RSI. Anytime the RSI gets above 70, which I marked in these red lines, red dotted lines, for vertical lines,
Yep.
and every time it got above there, so this chart again goes back a bunch of years, and right now we're at 71.89. So all I'm saying is the market's just due for consolidation, and I think we're probably in a time frame that may mirror this thing that we're going up like in 2000, because I think even though we may have a consolidation here that may last a couple of months or longer, the bigger trend is up, and I think this is kind of a repeat of the 2000-2012 time frame, or 2000-2011 time frame. But anyhow, this shows, if you notice, that worked out really well, just the RSI on the monthly time frame hitting over 70, and all of them picked tops. There's not one failure here. You know, this one kind of went sideways, but all of them are highs. So we got the same thing right here. So this is not the time to be extremely bullish on gold stocks. Now, these are the bigger gold stocks. I think the small ones are do fine because they are just starting to come off the bottoms. But the big ones, the Newmont Minings, the AEMs, and all those big ones are probably going to consolidate more of a sideways move, not a top of any consequence. So this is important to remember, that we're just due for a consolidation and nothing significant. But everybody's kind of bullish here. I got a lot of emails in my, what gold stocks to buy right now. And you can take your time, but I concentrate on the smaller ones compared to the bigger ones right now, because I think the bigger ones are not going to move up much. This is another chart. This is GDX with its monthly. This is a monthly GDX, and also I did the RSI. I didn't go back as far as GDX doesn't go back, to 1980s like XAU did. But same thing here happening. I think all we're doing here, we had a high in April, which is where I got out, and I think this is just a retest. If you notice, we're kind of making a retest of the April high right now, and you got the RSI up on the GDX at almost 74. So it's due for a rest too. So I'm thinking GDX is going to pull back down to that 40 range, 39, give or take. And I think that may happen over the next several weeks, if not longer. So not real big bearish here, but it's just a consolidation, and nothing. It needs to get at bottoms. You need fear in the market to drive the market higher, and you need on tops you get optimism. And so if the market goes up too fast for too long, you get an RSI up around 70 on the monthly time frame. That's never a good idea to step into the market, because chances are you're going to get consolidation. So that's what I'm kind of looking for. On a short-term basis here, I think probably the top on GDX is in. Again, I got out the mid-April high around 50. It could have probably done a little bit better because it hit about 53. We hit 54 on the recent rally up here. But at what point, I'm a big fan of volume studies. And anyhow, on a short-term basis here, last week's high tested the previous week's high if you notice here, on about 20% lighter volume just really dropped out on last week's rally. Right. And you just couldn't get through that high. You need, again, to break a previous high, you need at least equal volume, if not higher, to break through the previous high. And the weaker percentage, the greater percentage, less of the volume of the previous high, the more weak, or actually the more stronger that top becomes. So you got a 20% decrease in volume, so that's a pretty weak rally of last week. And I don't think we're going to need to test last week's high, so I'm thinking we already basically started the downtrend. I think the downtrend's started. So if market, again, if you close below the previous high, which is this little line right here, which looks like about around 53, we're close to it. We haven't closed below it. If you can't hold the previous highs, they'll try to take out the previous lows. Well, the previous lows on this instance is around 45. I don't think that's going to hold. I think we're actually going to get down to the next previous low, which is basically around 39. So I think that's where we're going. But first target is 45. The next target is down to 40. So it's going to take some time to get down there. You know, September maybe. I think it could be there. You know, maybe October. I don't know. But that's why I'm thinking the top is in, because the weeklies are kind of turning bearish here, unless we get for some reason, we get a lot of strength this week, which I doubt, because it's only a 4-day week, and we break above the previous high of last week. I don't think that's going to happen, so I think the top is in. So,
nice.
Just be patient.
I appreciate. You know, it's remarkable. I was jumping through the charts, and that was some great information, man, as always. And, 40 seems like a far way from 53. But what's remarkable is 40 only brings you back to the middle of October. And, yeah, it's already June. But in terms of the run that we had, and then you pulled back to 35, of course, but we were trading at $39 in October of 2024, and that was up from $25 in February. And it's been a heck of a run. It has, for sure.
Yeah. Well,
Tim, I appreciate the information, as always, man. We look forward to talking to you. And, so markets closed on Thursday. We'll talk to you next week. We'll talk to you a week from today, man.
All right. Thanks a lot.
Take care. Folks, stay tuned. I'm coming right back.